I and others will be keeping the introductions to this event today, which celebrates the work of the UN Tax Committee, because we've provided you some fuller CVs of all the participants, which is on the site for this event. The event is being recorded, if you've just heard, and we'll make it available on the Financing for Sustainable Development Office's website. We will be using the question and answer function for your questions and answers. We'd ask you to leave those questions till later when we have the panel, because the Q&A session will be after the panel. And the chat function is being disabled because we're in seminar mode. So use the Q&A for your questions later on after the panel or during the latter part of the panel. To substantive matters first, I'd first like to take you to a pre-recorded video introduction to this event from Mr. Liu Zhenmin. He is the Under-Secretary General of the UN Department of Economic and Social Affairs, UNDESA. Thank you.
Excellencies, distinguished speakers, dear participants, welcome to this UN Tax Committee panel discussion on the launch event. The Department of Economic and Social Affairs, UNDESA, is delighted to host you on this informal yet very special occasion. Let me start with the key message from the Secretary General's report, our common agenda. The United Nations is redoubling its efforts to support financing of the COVID-19 recovery, accelerated SDG progress, and climate action. To do this, critical part of our strategy is advancing a more forward-looking international cooperation on tax matters and inclusive norm setting. The United Nations has a vision of a fair and effective international tax system, one that enables countries to tax the value creation within their borders, takes into account the interests of all countries and stakeholders, and that recognizes citizens as the key stakeholders. Citizens, including our youth, expect tax systems that addresses the challenges of our time and help us to prepare for a sustainable future. The United Nations has made distinctive contributions to cooperation on domestic and international tax matters. It shapes international tax norms and policies and provides practical guidance for developing countries to address tax avoidance and evasion, reduce harmful tax competition, and fight tax-related illicit financial flows. We press ahead with the cutting-edge work in these areas. Yet, we also call attention to this moment when the pandemic has opened discourse on solidarity taxes, including windfall and wealth taxes to reduce inequalities. When disastrous effects of a changing climate mean environmental issues must now become a part of our daily dialogue and action, including in tax circles. And when the quest to build back better creates the opportunity to champion reform of tax policy and administration that promotes sustainable development and gender equality. Excellencies, dear colleagues, now let me turn to the 2017 to 2021 membership of the UN Tax Committee, whose publications we are launching and make available today. The membership brought a strong sustainable development focus to its 4-year tenure, and it fully delivered an ambitious work plan, even in the midst of the global pandemic. Many of you will know of their innovative bilateral solutions on taxation of automated digital services tax, a complex issue that is part of ongoing global effort for consensus. This is a new feature of the 2021 updates of the UN Model Double Taxation Convention, a signature product. The publications also addresses issues touching on the carbon taxation, taxation of government-to-government aid, and avoidance and resolution of tax disputes. My profound appreciation to the ongoing members for your outstanding productivity, collegial spirit, and perseverance in navigating some contentious issues and delivering balanced outcomes. I would also like to thank the Secretariat in our Financing for Sustainable Development Office, who have worked tirelessly to support this committee and the publication of their outputs. We would not have achieved such great results without the contributions of the wider UN tax community, including member states and other partners and stakeholders. In particular, Norway has been very generous in their financial support and has helped strengthen effective support to the UN Tax Committee, its subcommittees, and the related capacity building work. This has also made possible the faster publication process with expert editing and translation. Indeed, these practical and useful guidance products will now be accessible to policymakers, administrators, and taxpayers. At UNDESA, it is our honor, through our capacity building program, to disseminate the committee's guidance products to developing countries and with benefit to the international tax system. This work also provides essential feedback from developing countries, which informs the committee's ongoing and future work. We are thrilled to welcome the new membership of the UN Committee, a diverse and distinctive group of experts with, for the first time, a majority of women. We're delighted to have you with us for this event, with a great task ahead to make the international tax cooperation a major productive plank of our common agenda. To all participants, you are our valued stakeholders. We welcome your views on ways that UN Tax Committee can help advance a tax and SDG approach that builds trust and spurs transformation. Your voices are vital to ensure that UN guidance and support on tax matters are timely and practical, and that they address the priorities and realities faced by developing countries in their efforts to achieve sustainable development. We look forward to a very engaging discussion today. I thank you.
I will now give the floor to His Excellency, Mr. Colin Kalapila, President of the Economic and Social Council. The Tax Committee is a subsidiary body of the ECOSOC. He's also the Ambassador and Permanent Representative of Botswana to the United Nations in New York. Mr. President, the floor is yours.
Thank you very much, Michael, for giving me the floor. Mr. Louis Germain, the Undersecretary General for Economic and Social Affairs, Your Excellency, Mr. Odinge Kalhem, Ambassador and Deputy Permanent Representative of Norway to the United Nations, distinguished panelists and participants. It is indeed a great honor for me to have been invited to this very important meeting to contribute to the discussion on the present and future contributions of the United Nations Tax Committee. Today's panel discussion examines the crucial role of the committee in advancing a tax and SDGs approach to enhance international tax cooperation for sustainable development. This conversation comes at a time when the new committee membership is also preparing its work plan. This panel will also consider how the committee, as part of the wider ECOSOC family, as Michael has just mentioned, can help make good on the transformative promise of the 2030 and the Addis Ababa agendas. It will also consider how the United Nations is setting norms and policies and providing practical guidance that strengthens the capacity of countries to effectively mobilize revenues, fight illicit financial flows, build sustainable and resilient economies, and forge a sustainable path to development. Distinguished participants, by way of background, our 2021 ECOSOC special meeting focused on how countries can use tax policy and administration in tackling some of our most pressing challenges in an increasingly digitalized economy and in the context of the COVID-19 pandemic response and recovery. The meeting aimed to ensure that inclusive and effective tax policies and strengthened international tax cooperation become part and parcel of the decade of action to deliver the Sustainable Development Goals. Tax is inherently linked to development. It is a means by which countries obtain much needed revenue to fund development projects and develop infrastructure. It provides a predictable and stable flow of revenue to finance public spending. The discussions today are part of this ecosystem that advances taxation as a means by which countries will build back better, achieve the SDGs, and advance climate action. Multilateral cooperation and global solidarity play a vital role in building back better. The UN Tax Committee has embodied this spirit of cooperation. It gives special focus to least developed and other developing countries, which also helps to improve the international tax system as a whole. I note that the committee's ways of working are inclusive, multi-stakeholder, and multidisciplinary, drawing its expertise from government, private sector, academia, and intergovernmental and non-governmental organizations, thus ensuring that it delivers innovative solutions and balanced outcomes. This is clearly illustrated by the products being launched here today, which include, among others, 2021 UN Model Double Taxation Convention between developed and developing countries, 2021 UN Practical Manual on Transfer Pricing for Developing Countries, 2021 UN Handbook on Selected Issues for the Taxation of the Extractive Industries, UN Handbook on Dispute Avoidance and Resolution, which is a new product, UN Handbook on Carbon Taxation, which is also a new product, UN Guidelines on the Tax Treatment of Government-to-Government Aid Projects, which is another new product. These products provide practical guidance for developing countries to assist them in dealing with various challenges in taxation, whilst remaining in touch with the global realities and trends. Transfer pricing, extractive industries taxation, avoidance and resolution of tax disputes, carbon taxation, tax treatment of government-to-government aid, including the UN Model Taxation Convention, will significantly, particularly assist developing countries' efforts aimed at domestic resource mobilization for sustainable development. Distinguished participants, as I conclude, it also gives me great pleasure to congratulate the previous committee membership for its achievement and to join UNDESA in welcoming all participants to this panel discussion and the launch event. I know that the current membership will deliver impressive results as well as we set the scene for your work ahead with today's discussions. I wish you a very productive event and look forward to a successful tenure of the UN Tax Committee. I thank you very much.
Thank you very much, Mr. President. I next turn to His Excellency, Mr. Odd Inge Kvalheim, Ambassador and Deputy Permanent Representative of the Permanent Mission of Norway to the United Nations. And I do so with a recognition of the important role that NORAD, the Norwegian Agency for Development Cooperation, has played in supporting the committee work that led to this event, the publications and the very important translations which will be forthcoming. Ambassador, the floor is yours.
Thank you so much, Mr. Leonard, for convening us and also for your kind words to us. And I also like to extend many thanks to the Undersecretary General, Liu Zhenmin, who also had a kind greeting to Norway for our engagement on this matters. And not the least, many thanks to Ambassador Kelapil for his insightful opening remarks as well. So, dear colleagues, first of all, congratulations on the new mandate and the membership of the UN Tax Committee. We are pleased to see the growing interest among member states to support and to propose experts to contribute to this important work. We are also pleased that a representative from Norway has passed through the nomination process successfully. Too often, global standards are not fit for purpose. This can create a widening gap in capacities to embrace opportunities of transparency and accountability made available through multilateral cooperation. For us, it is key to 1, improve representation from developing countries where norms and standards are discussed and agreed, and 2, ensure that these standards and tools are adapted to needs and capacities of developing countries. 3, ensure that sufficient efforts are made to translate the standards and models into enhanced capacities in developing countries. As an inclusive standard-setting body that represents both developed and developing countries, the UN Tax Committee is uniquely placed in this regard. It provides important support and guidance to developing countries to implement more effective and efficient tax systems. Dear colleagues, we know that the vast majority of funding for the SDGs must come from domestic public resources. Estimates indicate between 97% and 99%. And the post-pandemic state of the world has significantly increased the financing needs. From a Norwegian perspective, we have experienced how we can use tax policy effectively to fund a welfare state. And there are many ways to look at the link between taxation and the Sustainable Development Goals. To list a few, we see that efficient and fair tax systems are essential to stimulate private sector investments. We know that the private investors value predictable tax systems more than tax breaks, but that countries still underbid each other in order to compete for investments. Tax can also be used to reduce costs in the health system by affecting behavior change through tax on harmful products. For example, reducing the prevalence of non-communicable diseases would reduce the burden on health systems and avail funds for other public expenditures. Tax is a powerful tool in the fight against climate change by pricing externalities and encouraging behavior change towards more sustainable patterns of consumption and production. The untapped potential is vast. And lastly, tax evasion and illicit financial flows also significantly hamper peace and security efforts by eroding trust in governments and weakening the social contract necessary to achieve development for all. We are therefore pleased to see that UNDESA and the Committee of Experts has elevated the attention to the debate on how tax reform and tax systems are an essential part of achieving the SDGs. This launch truly solidifies these efforts. In addition, the high-level panel on financial transparency, accountability, and integrity, the so-called FACTI panel, launched its report earlier this year. The report highlights the need for multilateral action to improve accountability and transparency. And while we have seen progress on some areas of tax and transparency, the progress has made the remaining challenges even more visible. We would welcome from the new committee a continued focus on possible responses to the challenges raised from developing countries and bridging the gap between the global norms and the practical implementation at the country level. We know that there are opportunities in bringing forward practical approaches to implementing green taxes as a response to climate change challenges, as well as pro-health taxes. But I would also challenge the committee to increasingly connect with the work on anti-corruption. This would be an opportunity to connect to work streams aimed at reducing losses of public funds from developing countries' budgets and move towards a more common approach to financial integrity. And with that, I thank you.
Thank you very much, Mr. Ambassador. For the next part of our proceedings, we will go to the two former co-chairs of the UN Tax Committee, the co-chairs from 2017 to 2021. The first of these, I'll introduce them both very briefly first. The first is Carmel Peters, former chairperson, as I say, of the Tax Committee from 2017 to 2021, and also policy manager of the Inland Revenue from New Zealand, from where she will speak. She's the first female chair of the Tax Committee. And secondly, we'll hear from Mr. Eric Mensah, also a former co-chair person and formerly of the Ghana Revenue Authority. He was the first co-chair from Sub-Saharan Africa. So with that, I will pass to Carmel first and then directly to Eric. Carmel.
Thank you, Michael, and kia ora, everybody. Distinguished speakers, dear participants, my co-chair Eric and I are honoured to take the virtual podium today to officially launch the 7 new publications of the United Nations Tax Committee. When we decided on our work plan in 2017, we knew it was ambitious. In 2020, in light of the outbreak of the global pandemic and the ensuing social and economic crisis all over the world, it seemed almost impossible to deliver. But the committee and the subcommittees quickly adjusted to our shelter in places orders, and we all adapted to working virtually. We faced and overcame challenges of working from different time zones and with constantly changing technology. Eric and I are both here on behalf of the 2017 to 2021 committee, a group of 25 people from all over the world. In the past 4 years, we have worked together, discussed, agreed, and sometimes honestly disagreed with each other. We always worked with a collegial spirit and perseverance in navigating some contentious issues and delivering balanced outcomes. Today, we are proud to say that we did it. We look forward to seeing our guidance products distributed as widely as possible to tax administrations and taxpayers in developing countries, and with benefit to the international tax system as a whole. Most of the publications are already available in English. The others will follow once professional editing by tax experts is complete. To further ensure wide accessibility, translations are underway, and we are delighted that a few of the publications launched today are already available online in English, French, and Spanish. We know that the Financing for Sustainable Development Office and partners will continue and expand its use of publications of UNDESA Capacity Development Program going forward. Indeed, some of the publications benefited from feedback on draft chapters used in capacity development workshops. Other chapters originated from earlier capacity development activities, which surfaced pressing needs for particular guidance. We count on all of the participants in today's event to join in distributing these products as widely as possible in your respective organisations and fields of work. Thank you. Over to you, Eric.
Thank you, Camille. Thank you. As my co-chair has described, the Task Committee has completed a tremendous amount of quality work in the past 4 years. We want to stress the members could not have done this without the support of observers to the committee work and participants in the subcommittees, as well as the Secretariat. We want to thank all the observers involved in the committee's work and participants in the multi-stakeholder, multidisciplinary subcommittees. You have added great insight, practicality, focus, and value to the committee's work. This inclusivity improves the quality of the guidance and is part of what makes the work of the Task Committee so special. We appreciate you for lending us your time and great expertise. We thank the Secretariat of the Task Committee in UNDESA for its steadfast and agile support during the last 4 years on all fronts: substantive, technical, organizational, logistical. We greatly benefited from the strengthening of the Secretariat and its effective support to the committee, in part due to the generous financial contributions of Norway, as well as value support from the government of India and the European Union. While we served in our personal capacities as members of the Task Committee, we all had day jobs. Thus, we want to add a word of thanks for the gracious understanding of our employers, in most cases, our Ministry of Finance and our country's tax administration. We take this as a sign of UN member states' willingness to invest in the important work of the UN Task Committee. Now, we are delighted to share with you a short video introduction to these results of the 2017-2021 committee membership. We are proud of all these practical and developing country-oriented products and of the collegial and problem-solving spirit that produced them. So I hand over to the Secretariat and enjoy the video and the lunch. Michael, please.
Thank you, Eric. Thank you, Carmel. And what Eric and Carmel didn't tell you is that a lot of the great work of the committee was due to the excellent chairmanship of Carmel and Eric and the way they complemented each other. So thank you particularly to both of you. We hope that you will continue to remain engaged with the committee as very distinguished alumni of that work. So thank you to you. With that, we'll now watch, as mentioned, a short video introduction to the guidance products developed by the 2017 to 2021 membership of the UN Tax Committee. I'll pass now to the video. Thank you very much.
The UN Tax Committee is distinct and globally recognized for its work in norm and policy shaping and provision of practical guidance in international tax cooperation. It generates guidance for governments, tax administrators and taxpayers, as part of mobilizing financing and other support for sustainable development, giving special focus to developing countries. A subsidiary body of ECOSOC, the committee meets in biannual sessions, while working year-round through its multi-stakeholder subcommittees. During the COVID-19 pandemic, the previous committee membership of 2017 to 2021 nevertheless delivered in full on its ambitious work program, refined its practices and working methods and accelerated the publication process of the following major guidance products. The 2021 UN Model Double Taxation Convention between developed and developing countries. This model was first published in 1980 and generally favors retention of greater host country taxing rights. The 2021 version of the model addresses, among others, concerns expressed by developing countries regarding tax treaty obstacles to the taxation of foreign enterprises on income from automated digital services and on gains on so-called offshore indirect transfers. It also features new guidance on the application and interpretation of the definition of permanent establishment, the concept of beneficial owner, and the application of the model's provisions to collective investment vehicles, pensions funds and real estate investment trusts. The 2021 UN Practical Manual on Transfer Pricing. The effective application of transfer pricing rules is key to protecting the tax base of developing countries and enhances their capacity to mobilize domestic resources for sustainable development. The 2021 UN Transfer Pricing Manual extends existing guidance by introducing new content, in particular on financial transactions, profit splits, centralized procurement functions, and on comparability. Capacity development based on the manual has encouraged developing country feedback and aided in identifying these priority areas for improvement. The UN Handbook of Selected Issues for Taxation of the Extractive Industries. The UN Handbook on the Extractive Industries responds to country demand for clearer guidance on the policy and administrative aspects of applying taxes to the extractive industries. It offers guidance on specific areas of interest for developing countries, covering issues such as tax treaties, permanent establishment and transfer pricing, the government's fiscal take, VAT, decommissioning, contracts, and indirect transfer of assets. The 2019 UN Manual for Negotiation of Bilateral Tax Treaties between Developed and Developing Countries. This manual provides practical guidance to tax treaty negotiators in developing countries, in particular those who negotiate based on the UN Model Tax Convention. The UN Handbook on Dispute Avoidance and Resolution. This handbook provides guidance on the various mechanisms to avoid and, if needed, resolve tax disputes that may arise under the provisions of domestic income tax laws and tax treaties. The UN Handbook on Carbon Taxation. Carbon taxes are a policy option aimed at curbing carbon-based emissions responsible for climate change, in line with the commitments assumed by countries under the Paris Agreement. The new UN Handbook on Carbon Taxation responds to country demand for clearer practical guidance on policy and administrative aspects of designing and implementing such a tax. The UN Guidelines on the Tax Treatment of Government-to-Government Aid Projects. These guidelines respond to the Addis Ababa Action Agenda that called on countries to avoid tax exemptions on government-to-government (G2G) aid. They provide guidelines to assist donors and recipient countries to determine the appropriate tax treatment of government-to-government aid projects. We celebrate the 2017 to 2021 membership of the UN Tax Committee and its subcommittees for an open and inclusive dialogue, which, supported by the active engagement of member states and observers from international and regional organizations, academia, civil society and the private sector, accelerated the publication process of these products. We also applaud the generous financial support of the Norwegian Agency for Development Cooperation, NORAD, India and the European Commission, and extra efforts by the Secretariat in the UN's Department of Economic and Social Affairs for this success.
Thank you very much to all involved in the work and indeed in that video. The English versions of most of those guidance products will be available in electronic format in 2021 with the links on the Tax Committee site, and we'll give a link in the chat area to the site where you can find all the products. Some of them will be there today and some of them are forthcoming very soon. French and Spanish versions will be following, some this year and some in 2022. Just before we move to the next part of the day, I'd ask you, particularly if you're going to ask a question, if you could put your organisation or your country in the name, which means that you go to the participants list and click on, usually it's more, and rename yourself just to include your country or your organisation. So with that, the next part is a panel discussion on some of the issues going forward for the tax world and the UN Tax Committee. Now, our moderator is Lisa-Lotte Kana. Is Lisa-Lotte there? I'll just find if Lisa-Lotte's there first.
Yes, I am.
Okay, Lisa-Lotte, I'll introduce you briefly. Happy to have you back. Lisa Lotcana is the head of the Department of the Internal Revenue Service of Chile, and she's both a current member of the UN Tax Committee and a very distinguished former member of the committee. She was a member for, I think, 2 terms, not most recently, but she has the experience of the past of the committee and also some very important ideas for the future of the committee. So I couldn't think of a better moderator for that and other reasons. So over to you, Lisa Lott. Thank you very much.
Thank you, Michael. Thank you for that introduction. Buenos dias, distinguished excellencies and participants. Good day, good evening, and everything in between. First, I want to thank the DESA Secretariat for organizing this event, where we just heard of the great work of the Tax Committee and what it has accomplished in the last 4-year period. As Michael mentioned, I have been part of the Tax Committee before, and it's amazing to hear again how much can be done by, as Eric mentioned in his speech, that there are these participants who are actually working full-time in other areas of their working life and still can produce so much important work for the Tax Committee and for the UN. As mentioned, it's been done by observers and lots of inclusive help from many parts, but it's always challenging, and especially for us being part of the new membership of the Tax Committee, to hear, and inspiring, of course, what has been done the last 4 years. This part of the today, we are going to try and listen a little bit to our colleagues, experienced colleagues, where we can actually go forward for the next future and the future contributions of this new membership of the committee. Later on this month, actual dates are 19th to 22nd and 25th to 28th of October. The new membership of the committee will have 3-hour meetings those days. And if you are interested, please remember to register for those events. I hope as many as possible members are possible to join us today to hear, discuss, and share views on the possible agenda for the next 4-year period. Because it's, as you all know, it is the members of the committee that decides on the agenda. But 4 years goes very fast. So to have this opportunity to hear and discuss with a broad sector is extremely useful in my view. My introduction is not going to be long, it's short, because I think we need to have time to listen and discuss as much as possible with the speakers on these panels. I hope you have all read the background note for this event, so let's start the event immediately. By the way, I will not also spend time on the biography of the speakers. They are all distinguished and accomplished, has accomplished so much that it would take up too much time for me to take that for each of them. So, but there is an annex where you can find all the speakers' biographies. Before I give the floor to our first speaker, I do want to congratulate the ATAF organization, because this is where Mr. Worth is the executive secretary. And I truly think that ATAF has made a difference. It has made sure that the African voice is being heard in the international tax arena, and all in a very short period. I think the organization was founded recently in 2008. So congratulations, Mr. Worth. Logan, can I please ask you to present your intervention? We are, by the way, we have planned interventions of about 8 minutes. Please, Logan, go ahead.
Thank you very much, Lisa Lott, for your kind introduction. And thank you too for the Department of Economic and Social Affairs for the opportunity. I'm very keen to be part of the discussion on the role of this tax committee. Congratulations to the new committee. And in Africa, we're particularly pleased with the strong African delegation on the committee. And we in ATAF continue to play a technical role in support of the members of the committee. And so it's important that we look at the issues of the role of the committee in a time when global tax rules are being made in many tax areas. And whether it's the environment, the digital economy, transfer pricing. A lot of these discussions and decisions find their way at a G20 level where political decisions are made. And it's very important that we look at the role of the UN, the United Nations, as a broader body where tax cooperation and tax governance can play its role. And this is very important to us. The issue of global tax governance is increasingly at the center of the international tax dialogue. And during COVID and post-COVID recovery is critical. We can only look at the cost of vaccine and its distribution during COVID-19. And it tells us a lot about the possible absence of public health and public goods versus profit and multinational protection. And therefore, we need a United Nations role that is assertive, collective, and cooperative. And the role of the UN Tax Committee and the work done so far is indicative of what is possible, because post-economic, socio-economic recovery and growth, for example, in Africa, will require investment in healthcare and other infrastructure to facilitate economic activities. And so on the specific question on how the UN Tax Committee can continue to contribute in advancing tax and SDG, I would want to say that it is important for the UN Tax Committee to continue to focus on domestic resource mobilization as it currently does to improve revenue, but to look at issues of particular interest to developing countries. As you do, I would say that the focus on improved revenue, getting the tax mix right, a lot of developing countries, particularly on the continent where we are, relying on single source income and not have a sufficient tax mix, policy and administration reform, but importantly, extending activities beyond the reports, the excellent reports, to look at possible actions that can support the outflow of those reports, because that is where the impact really lies. I think it's important that we look at support for sub-regional work in policy and administration and developing capacity in the standard setting work that is taking place. Importantly, colleagues, it's important, I believe, that the committee, as it does, continues and strengthens its ability to develop its own agenda based on members' needs. In the past, not in the recent past, but in the past, we do think there's a tendency to follow a more dominant global agenda, for example, as said by the OECD. But the question is, what are the tax risks and priorities for our own UN members? And so those are important elements. And what are the opportunities for exchanging tax dialogue and coordination and cooperation? We think that there is a great amount of reform happening in the global tax arena. The work on taxation of the digitalized economy has brought the prospect of new taxing opportunities for developing countries. Unfortunately, a greater part of that reform has been sidelined by voices from developing countries and ultimately not fully achieved through the allocation of taxing rights to source countries in a manner that developing countries envisaged it. Not that we did not have a chance to participate, but the strength of that participation and the coordination thereof, and ultimately where these agreements are reported to vis-a-vis G20, makes it a very unbalanced platform, whereas a UN is a balanced platform. And so these are important elements of what we want to have this committee achieve. And the needs and priorities of developing countries following the downturn caused by the pandemic. The question has two parts. What are the opportunities for dialogue? Well, this is the UN committee. The opportunities are a given. It represents all countries. The UN represents all countries in the world. And so there's an opportunity here for increasing the call for regional and sub-regional dialogue on key global issues. It's a space the UN can take. It doesn't have to ask for it. To produce policy and standard setting documentations as you do, but to follow that up with decentralized conversations and implementation models, not necessarily brief training programs, but actual capacity to actually implement within nation states. And then, of course, continue to invite submissions on key issues to create a platform to engage on the US for these tax issues to go beyond the committee. But how do we bring it onto a UN central agenda so that at the global level and at the more balanced level, the issues that of those 7 publications today becomes a standard setting that is balanced as it is at a more globally balanced environment. This is the opportunity that this committee has. And in the last committee, we have seen the power and the energy. I want to say that with regards to coordination and cooperation, you are the UN, you have the global convening power. So we must do work in global tax governance, especially to have a balance between national sovereignty issues. I think both the excellencies from Botswana and China has mentioned this. The issues, the balance between national sovereignty and global standards and rules is critically important. The deal on the digital economy and the dispute resolution, for example, is posing a great challenge between national jurisdictions making rules around taxation and the global rules being set over which national jurisdictions have no authority. It does challenge the very basic essence of global tax governance. It's important that the committee looks at that. Maybe if I can conclude, the current issues important for developing countries obviously includes the digital economy, the environment, issues around transparency. The rise of regional tax organizations presents an excellent opportunity for the committee to look at improved global coordination. Finally, I think the committee has it right when it talks about extractives as a key part, transfer pricing and multinational taxation and multinational behavior. I briefly want to add, the informal nature of developing country economies is an important element of taxation that can be looked at, it must be looked at this level. And even more importantly, the investment in technology and digitalization for tax administration, automation, it eradicates corruption, it brings in efficiency in collection and all sorts of other advantages. And of course, a stronger global voice. In conclusion to the tax committee, please continue the excellent work as the previous committee has done. And we must get more developing countries to participate and contribute to your work. And the big challenge to the committee and to UNDESA is expand the mandate, go bigger, invest in a global role. Don't ask permission, set your agenda. In that way, we at ATAF, and I'm sure the network of tax organizations will be ready to support your growth. Thank you very much.
Thank you, Logan, for your very sort of thoughtful intervention. I think there's nothing we can disagree with you on it. I think I would pick up what you were saying about follow up with capacity building. I think also it's very important that we do not double the work that other organizations are doing. And I think in that sense, the focus that we will have to, and we should keep on having, is on developing countries. And I think slightly we have already had a bit of conversations, and I think thinking out of the box a little bit, sort of not always going behind what other organizations are doing, but actually look immediately a little bit higher up. I think that is a little bit of what you said, and I think that is very much in line of what I've heard from other members of the committee. So I thank you for those that intervention, Logan. Next is my fellow South American from another great international tax administration organization, SIAT. One of my fond memories of SIAT is a conference in your home country, Marcio, in Bahia. I do hope we will be able to meet in person again, because I think actually this is a little bit mundane in this high-level discussion, but I do think meeting in person is easier and makes things easier sometimes. So I hope we will be able to meet up a little bit more. I also think actually that with making use of the virtual space that we have now created, like, some of us, we don't have fat travel budgets and we live far away. And we should actually make much more use of being able to meet virtually. So with that in mind, please, Mr. Verdi, Marcio, please invite you to make your intervention. Thank you.
Oh, thank you, Liselotte. First, I'm very pleased to participate in this very important webinar. Thanks for the invitation. I'm very happy. And first of all, I totally agree with Logan comments. In order to avoid to repeat, I will try to focus on different issues. Regarding the first question, United Nations Committee contribution, one point that we all agree is the global acceptance of the committee. This is, I think, is clear for us. The committee products and discussion attract the attention of all developing countries. But and in this case, to avoid to repeat, I would like to touch one point that I think could be important. In my opinion, because the committee could also be a strong voice for the strengthening of the tax administrations. In other words, the committee has done and does and will do a very important work in the field of international tax policy regulations. No doubt about it, and we appreciate, we hope the committee continues producing very important guidelines. But I think that United Nations, using the committee, could also pressure the countries to strengthen their tax administrations. My daily activities, I'm always working with the developing countries, and they have huge restrictions. So I mean, in terms of budgetary resource, to guarantee at least a minimum medium-term perspective of resource for 2 or 3 years, a minimum level of investments in information and technology. There are many countries, of course, and it's not a case to mention, they have a ridiculous amount of money to invest in the use of IT. So, of course, the gap is getting bigger and bigger and bigger in the use of IT. And especially in the formation of careers, state careers of tax officials. So we are always working in order to prepare people for the private sector. When we get a small group of officials that they know what is a transfer price auditing, they leave to the private sector because we don't have careers. We don't have a minimum remuneration, and the United Nations could be a voice, could be a strong voice using the committee. These variables, IT, budgetary, and human resource, today, we should be honest, are highly restrictive to the adoption of the international standards proposed by the committee, by any other organization. So we receive the standards, but we don't have people to implement, even if we can approve the legislation. Looking for the second point in terms of opportunities for enhancing the tax dialogue, coordination, cooperation among international and regional organizations. First of all, for me, it's interesting that you use it coordination and cooperation because they are not synonyms. We are always cooperating with others. When we look for coordination, it's much more complicated. We need to coordinate. But I believe that a great opportunity for the committee is to promote, in order to promote the dialogue, is to seek a rapprochement with the NTO, with the network of tax organizations. The NTO brings together 9 regional and international organizations, CATA, COTA, PITA, TAF, CIAT, CREDAF, TAIC. So we are a strong group together. We can maybe be closer to the committee. And I still have 2 points in this terms of opportunity for the committee. The first, in my opinion, the Addis Ababa Tax Initiative is doing a great job. No? It's an excellent place to improve the international coordination. And we are all there too. So I think what we need, maybe what the Addis Ababa Tax Initiative is missing, because the initiative needs to have a more global look. Since today it is concentrated more in Africa, what is okay, but maybe open more. But without a doubt, it's an excellent forum and are doing an excellent job. And I think the United Nations using the Addis Ababa Tax Initiative and NTO a lot for ITD. We organized 5 world conferences, and at the end ITD disappeared, and now we have only the platform. The platform is very important, but the platform congregate only the biggest players, OECD, United Nations, World Bank, IMF. We need to I don't know, to reverse this, but I'm not saying that we need to recreate the ITD, but at least to include the NTO in these discussions. No? Well, looking for the needs, the third question, needs and priorities for developing countries. Of course, I always repeat, for example, our BEPS is an exponential BEPS. So we have other problems that the European countries, they don't have, the developed countries, they don't have. In a forum, I remember one commissioner said, and it was a great concern, that the black economy of his country was getting bigger, representing 4% of the GDP. We have countries in Latin America and Africa, the informal sector is more than 80%, 70%. So we have a huge, unacceptable level of tax evasion. We have others base erosions beyond BEPS. BEPS is a great problem, program we support, but I'm saying we have problems beyond. But to repeat, I think we need to look for the budgetary process. We need to guarantee at least a minimum level of resource for the tax administration. Because my point is, we are facing the huge crisis in the last 100 years. My concern is that to leave this COVID crisis, we'll repeat the mistakes that we did in the past, financing the crisis with debts or using inflation, a tax inflation, to finance our governments. I think it's time for tax. We need to promote the tax cultures, the values of the taxation, because only with tax will guarantee a financial and sustainable conditions for our countries. Thank you very much for my 8 minutes. I have 1 second, so thank you.
Thank you so much, Marcio. You mentioned actually some novel points, and I think I recognize many of them from our tax administration. So those are very interesting points. Careers for, tax officials, losing to the private sector, etc. And I think I'm not really sure how the tax committee could deal with that, but it is interesting points you're raising, Marcio. And I think also you mentioned the identity of the tax committee, which I think has been always very inclusive. And I think it'd be great to hear, more organizations that there are like like CIAT, like ATAF, and many more, the civil society and etc. And I think the identity of the, as I said, of the UN committee has always been to have inclusiveness, participation as much as possible, and counting on the actual technical help of these people, of these or different organizations. And I think I don't foresee that that will change. I hope it will increase. I also think you mentioned something on coordination. I think that it was a very interesting point, Marcio, because I think we will talk a lot about cooperation, but coordination is actually a word that and something we should think a little bit more deeper on. So thank you very much, Marcio, for those valuable points. Next, we're going to hear from Miss Joy Nubai. I'm not too sure I pronounce it well, but I hope I do. Joy is an academic from Vienna University, and I'm happy to share the panel with a fellow graduate from LSE. So please, Mrs. Nubai, Joy, go ahead with your intervention.
Thank you so much, and thank you for having me this afternoon. Well, it's afternoon here in Vienna. First, I should say that my comments are probably going to reaffirm what Logan and what Marcio have said. And one of the things I began to think about, when these questions were put to me, first I thought, what do we mean by the tax and SDG approach? And I think it's extremely important that the committee takes a first step of defining what they mean by the tax and SDG approach. And the first and foremost, it's about the ability of countries to secure greater financing for the SDGs through more effective DRM. And DRM really entails more than tax revenue raising. It touches upon the overall fiscal policies adopted by countries to raise, secure, and spend revenue for and investment in sustainable development. And this really means that we shouldn't only be concerned with tax policy itself, we should also be focusing on the ways in which other aspects of fiscal policy interact with and even affect or facilitate the operation of tax policy. And this means that policymakers and tax administrators need to be concerned with more than just tax regulations. And often it means you're interacting with investment, trade, budget, IFF's policies, amongst others. So first and foremost, the need for strengthened DRM in practice means that developing countries need to raise their tax to GDP ratio. For instance, based on OECD data in 2018, across 30 African countries, the average tax to GDP ratio was about 16.5%. This is compared to 34.3% in OECD countries and 23.1% in Latin America. And the gap is obviously huge. There's obviously a lot to be done, but achieving this increase in tax collection, it requires political willingness to review tax policy choices and to invest in more than, in the capacity of tax administration. So we need to go beyond just tax policy. We need to look at the practical aspects. And there's a need to focus now on context-based efficiencies and identify current weaknesses in existing systems to resolve them. And this means we shouldn't focus on introducing yet more new policies. We should be evaluating how well the current policies are working. So, going beyond the DRM perspective now, tax and SDGs should also look beyond considerations about financing. We need to shift towards identifying the ways in which tax decision-making can affect or better support some of the broader goals, targets, and indicators like gender inequality or decent work and economic growth, or peace, justice, and strong institutions. So from the perspective of strong institutions, for example, we need stronger administrations with sufficient capacity, research, transparency, but also we need to ensure that they're engaging in cooperation with other agencies in order to combat illicit financial flows, since we already know that tax collection capabilities are often affected by illicit financial flows. So cooperation with equally effective institutions like FIUs or financial intelligence units and other law enforcement agencies can actually assist tax authorities to better identify tax crimes through sharing of more data, more efficient investigations, and even supporting each other in the recovery of proceeds. Just to come down to then what it means for the committee and how they should be evaluating their contributions, it's actually important then when you're identifying the prioritization criteria for the agenda that you place the SDGs as a key factor. So this should influence your deliberations. You should be asking the question of which of these agenda points will actually contribute most effectively towards achieving the SDGs. Next, it actually requires evaluating how these agenda points contribute to the SDGs. So one point I would really emphasize is the need for a review of each aspect of the proposed agenda to evaluate some of the key goals, the targets, and the indicators that specific work outputs touch upon. And that goes into a theoretical and a practical review. That means that it's time for the committee to be concerned with the actual on-the-ground situation and the experiences of countries in implementing some of the work outputs of the committee. Finally, cooperation is key, right? We actually need to now think about what does it mean for who we're cooperating with for our current and future actions. So it might entail inclusion of more SDG experts or multi-stakeholder forums to evaluate based on the SDGs or greater research related to the SDGs. Now, I'll just try to close out with some areas that we think should be worked on or addressed in specific, right? First of all, there's a need for developing countries to now focus on setting their own agendas, and they shouldn't be distracted by international developments. They've often resulted in greater capacity constraints as the solutions have become more and more technical. And of course, the best example being the BEPS2 debate, the current ongoing debate. So some key areas that should be addressed in a much more collaborative way, especially with a view to developing shared solutions. So looking at the experiences of fellow developing countries, looking at South-South dialogue in order to build these experiences, looking at the challenges posed by informality, how to approach the revenue potential of VAT, or even how to improve upon local property taxes. Of course, it's undeniable that VAT presents the largest potential source of revenue for most emerging and developing economies, and it's expected to grow in importance. So in many countries, the bulk of revenues are raised from cross-border transactions. And what's happening is that companies are increasingly seeing more disputes with revenue authorities. And this growth in cross-border VAT disputes now needs to be openly addressed. So the committee may want to create a dedicated subgroup to VAT, first, to assess how effective it is in contribution to DRM, its contribution to sustainable development, but also to evaluate the consistent issue that's been brought up about its impact on inequality, especially on gender inequality. Next, it's important to identify the tools to ease capacity constraints in tax administration, including their ability to facilitate more cooperation to combat illicit financial flows. I think Logan has already talked about the potential for new technologies and what they offer in terms of capacity constraints, reviewing information, identifying risks. That there's huge potential that could be considered, and another dedicated subgroup might be required here to look at South-South experiences, as in our experience we're already beginning to see a few tax authorities that are beginning to use technology. The prevalence of tax measures being challenged in investment arbitration is becoming a key concern, and this has been demonstrated by the recent Karen and Vodafone cases. And I think this is really influencing the experience of developing countries with dispute settlement at the international level. So it's time to more concretely address the interaction of taxation with investment, and increasingly probably with trade agreements as well. It's quite pressing. Of course, there's always the topic of wealth taxation. And I think the Pandora Papers have really emphasized this topic. And it's probably time to consider looking and establishing a subgroup evaluating the potential for greater wealth taxation. And looking at the current tools being used by some of the developing countries we work with. Finally, the need to combat IFFs is still a challenge, and it still needs to be openly addressed by the committee. As you know, it undermines the legitimacy of governments and reduces taxpayer morale. And over the last year, the work of the UN FACTI panel has been extremely important. However, it's time for the UN Tax Committee to bring the tax people into the debate, and then to encourage cooperation at the international level. And some of the ways this could be done is the informal dialogue. Maybe reach out to FATF, to the Edgemont Group, establish some informal dialogue. This has the potential to actually help national authorities that are trying to better engage their counterparts across the borders to begin talking to each other. And that's just talking to each other can actually really change the nature of an investigation, or even the understanding of the rules that you need to follow. Just to close out, I'll say that the committee needs to prioritize actions which are of the most relevance to developing countries. And this has already been said, and hopefully it will be said again. We need to identify areas where they can make significant contribution, provide a forum that develops input into the next stages of reform of international tax. But now they also need to look beyond the tax issues, because tax is now being affected by more than just what we've been focusing on. Given the extremely important work products of the UNTC, which have continued to provide great guidance for developing countries, I think capacity building is now key. We have great tools. Now we need to test how they're working out and see how we could improve upon them. And this should be viewed as a great foundation block, because the ability of developing countries to continue to implement and continue to engage and express their concerns is actually based on how well they can practice or exercise their capacity. Thank you very much.
Thank you very much, Joy. Very many important points there. I would pick up one which I hadn't heard before, and I think it's a very, very important, good point, is actually to evaluate the efficiency of what the committee is going to do, because you might have a very sort of interesting or subject that you really want to deal with, but in the end of the day, what is the use of it? What is the efficiency? Use indicators to really focus the work of the committee on issues that makes an impact. And I thank you for those words. Very, very useful. And I'm sure that the committee will consider all of those points in the agenda. Now we are going to hear from civil society with Ms. Reading. She is working for Eurodad, but started off working with climate policy. Unfortunately for that important movement, she got interest in development and tax policy. So now we will benefit in this group from her perspective of some of these issues. So please, Ms. Reading, Tove, go ahead with your intervention.
Thank you so much, Liselott. Yes, I actually changed because they keep saying in the climate negotiations that there's no money. And it was very nice to change to tax and discover that's definitely not true. Anyway, thank you so much for the invitation. And first of all, congratulations to the old UN Tax Committee. The list of publications is impressive, but I think when we think back to all the very late nights it took to produce those outcomes, it's even more impressive that so much was achieved. And a very warm welcome to the new tax committee. I think we can say that the civil society organizations have very great expectations, and also is looking very much forward to engaging with the work of the committee. I am going to raise some points, but first I wanted to flag that there have also been submissions to the consultation. Eurodad has sent one submission. There's also, for example, a submission from Tax and Fiscal Justice Asia, TAFTA, which is a network of Asian organizations working on this. And of course, we're all working together in a global alliance for tax justice. First, I wanted to echo the point raised by Mr. Vogt on expanding the mandate of the UN Tax Committee. I think this is very important, and make sure that the work actually addresses the real world issues that are happening. And I wanted to flag one point in the mandate, which means that there is an opening, and the mandate says that the committee should take on new and emerging issues. Given the nature of tax, there's a lot to be done on that issue. And I think we saw the previous committee take the work on Article 12b as an example of responding to the developments and looking at the taxation and the digitalized economy. So much more of this work, and really using the part of the mandate that relates to new and emerging issues. One thing we always hear when the committee takes on new issues is the discussion about duplication. And I just wanted to flag that this discussion only makes sense if you are one of the countries that is participating in the other processes. So if you imagine you are a G7 country, then you have to discuss tax in G7, and then you discuss it in G20, and then you discuss it at the OECD. But a third of the world's countries are not in any of those processes. So it really doesn't make sense to talk about duplication when we discuss issues at the United Nations, because that's actually the only place where all countries are involved. And of course, there will be parallel discussions going on, but there's nothing of the sort like what we have in the United Nations. It is the only body where all countries are participating on an equal footing. And that's definitely not the case in the other bodies that are currently setting global tax rules. So in relation to the role of the committee, taking on new and emerging issues would also mean to move beyond the scope of looking at the guidance in relation to transfer pricing and tax treaties and so forth. That very much reflects a world that is being left behind in favor of new types of international tax mechanisms, including conventions and including looking at the global profits of corporations. So as everyone else starts to look beyond transfer pricing and tax treaties, it's very important that the committee also starts doing that. And in that context, I also wanted to echo the points raised by Ambassador Kvalheim about the FACTI panel's report. A lot of very important work went into the FACTI panel's report, and it's definitely obvious for the committee to follow up on that. One of the most prominent recommendations was that a UN tax convention should be developed and that an intergovernmental tax committee should be set up at the United Nations where the governments can discuss these issues. It wasn't the first time we heard about the UN tax convention. It was brought up already 2 years ago by the African group at the United Nations. They suggested a UN tax convention. It was also included in a menu of options that was developed for the UN General Assembly on how the international community can respond to the COVID crisis. So the UN Tax Convention is definitely a new and emerging issue. And one obvious question for the committee is, what could such a convention include? What could be the benefits of having a UN convention to address international tax issues and establish international tax cooperation? And I would also say that the committee has a key role in looking at what's currently being developed at the global level. Of course, there's a lot of attention now around Pillar 1 and Pillar 2 that's being discussed in the so-called inclusive framework. But Pillar 1 comes with a condition. We still don't know the details, but it comes with a condition that developing countries and others would not be allowed to take other measures unilaterally. So countries would be given up the opportunities to introduce, for example, digital services taxes. There's also a discussion about how developing countries can use custom duties to raise more revenue. So one important role for the committee could be to look at Pillar 1, to look at the challenges that comes with Pillar 1 and to really assess what the costs and benefits are for developing countries, but also to look at what the alternatives would be. For example, we've heard developing countries suggest fractional apportionment as an alternative. Also in relation to Pillar 2, the rules that are currently being negotiated have a clear preference to the countries where the multinational corporations are headquartered. That's a very political decision, and it means that a lot of taxing rights would be allocated to the home jurisdictions of multinationals, obviously at the expense of other countries. There are also alternative ways of structuring a minimum effective corporate tax, so that could be another key issue for the committee to consider. And lastly, as the talk about environmental tax comes up, and with my past of working on climate, I would say I find it really important that the decision-making and governance on tax does not spill over into environmental issues. Climate change and environmental issues, that's actually an area where developing countries are participating on an equal footing and where the United Nations is playing a key role and delivering some very, very important global standards and agreements. So rather than have the tax governance spill over into environment and basically making that area less democratic and less participatory, very important to let it flow the other way and finally let the tax decision makers learn from the way that the UN environmental agendas have operated. And in closing, for the work of the UN Tax Committee, of course, we find it really important to continue the strong engagement of observers We've really appreciated the ability to participate in the discussions and the very lively debates that have been sometimes, I think, have been beneficial for all sides. We would also encourage the committee to really stay in touch with especially developing country governments and make sure that they are able to feed into the work of the committee on an ongoing basis. And lastly, one issue to think about is we see no reasons why the meetings of the UN Tax Committee should not be public, especially now that we've all gotten used to using Zoom. Unlike many other UN meetings, we find that more transparency could be of benefits to all parties. Thank you again.
Thank you, Tuva. Very new and very stimulating comments from you. I think you have pinpointed that we need to do to keep our focus on new and emerging issues, and I think we also heard that from Logan, that in the end, in some time ago, the committee actually only were sort of looking at the model, trying to update it, copying a little bit what the OECD had done, etc. And I think that switch has been made, and it's just going to be increasing. And I think hopefully, you know, we will pinpoint, and with the evaluation that Joy was mentioning, you know, we do have to make an evaluation on the usefulness of our work as well. So thank you for those stimulating points, and we look forward very much for your participation in the future work of the committee as well. Thank you. Finally, but not last, as they say, we will hear from the private sector, where Mr. Francis Kamau from Ernst & Young is going to provide us with the business perspective. So Mr. Kamau, Francis, please go ahead with your intervention.
Thank you very much, and I hope you can see me.
Yes.
Thank you very much. Maybe in terms of the interventions, some of us are working in least development countries, so a bit basic. So is the perspective I'd like to give. Thank you very much, the UN Tax Committee. And to the first question, especially how the committee can contribute to advancing a tax and SDG approach that can benefit development. I'll basically place it into three pillars. The pillar one is to focus on areas to meet the 17 goals from a tax administrative perspective. And onto that pillar, you'll see we need to, of course, continue encouraging our government to initiate effective, efficient, and effective tax collection method, mechanisms, and policies. This is so basic, but remember, many countries, especially the countries I've worked in, Somalia, I've worked in Sudan, and part of Congo, and including Kenya, they don't have a national tax policy. Some of them will be arguing there is a tax policy, but I can tell you from the private sector and my intervention, there is no tax policy. The other pillar, which we need to basically think through, is supporting, promoting tax incentives for investment, implementing this. For example, you're looking at how can the committee assist in championing fiscal policies that focus on expanding the tax base. It's quite
Francis,
basic, but
sorry to interrupt you, but we do hear you a little bit breaking up. I don't know if you could be closer to the microphone, perhaps, or...
Not a problem. You can hear me now?
That's a little bit better. Yes, thank you.
Thank you. I'm closer to the mic. So thank you. Up to the pillar 2, I was talking about championing the fiscal policies that focus on expanding the tax base. For example, in Kenya, we have 20 million voters against 4 million taxpayers, which is quite unfortunate. So the base has not been, of course, expanded. Under pillar 3, on the same question, is to seal loopholes facilitating aggressive tax planning. Many countries like South Sudan, Burundi, and of course, Somalia and Djibouti, they don't have proper transfer pricing policies. Kenya has one. So of course, I've been involved so much in terms of training the National Revenue Authority of Sudan in terms of transfer pricing, and is an area which, of course, we can be able to be supported. Double tax treaty negotiation is a big issue. Of course, for Kenya and Mauritian treaty went to court by some teams which felt it was leaning towards Mauritius. So that particular support is required for these countries. Some of the specific areas of support by UN Tax Committee through collaboration, participation, and guidelines, I just came through and mentioned that under collaboration, we can collaborate in enhancing exchange of information among revenue authorities. It is happening up to a certain level. I know ATAP is on call, but not across board, especially some countries which are LDCs. In terms of participation, it's helping the LDCs struggling with expanding, protecting tax base by participating in their relevant decision-making process. If the government allows, then we can support them in decision-making processes. In terms of guidelines, programs that support monitoring and peer review to create avenues of experience and information sharing among tax policymakers, that one has been well covered. In terms of the next question, basically, which was asking about enhancing dialogue, coordinations, and cooperation among international makers, regional organizations, that is, maybe I'll collapse it into 3 areas. One of them is the use of existing and regional economic blocks to facilitate advanced collaborative tax policies. Of course, the committee can work with the African Continental Free Trade Area, CIFTA, for African countries. We also have another one which is called Pan-Arab Free Trade Area, bringing 14 countries together. And this platform can actually be used to enhance cooperation and coordination, not only on trade policies, but of course, I'm sure some of them are new, but it's going to actually can expand tax policies among member countries. On to the second point, in terms of identify and addressing common challenges for LDCs, there are quite many challenges. I'll mention some of them. Technical support on trade negotiations, for example, the capacity for efficient negotiation. I'm sure Joy talked about that capacity. It is lacking. You can see Djibouti negotiating with USA or England. I mean, they need capacity and support. Technical support to assist step up multilateral regional cooperation to track customs procedures at border points. These border points have a lot of problems and challenges. Again, technical support is important in this particular area. Technical support on logistical disruption, especially in movement of goods. Of course, physically, if you come to this part of Africa, you meet so many roadblocks and toll stations, some legal, some illegal. Of course, that particular technical support is very important. Technical support to promote well-structured public-private partnerships. Some of these guys, usually in some of these countries, don't understand of enhancing a well-structured public-private partnership policy. Kenya is struggling to come up with a bill on it. Of course, I'm sure it's out, but it's not very, very smooth enough, as you can see the aspects of France and Fiji of this world, the way they have tried to structure in their home countries. The third pillar, again, on the same question, is to create avenues of knowledge transfer and experience sharing. That sharing has been discussed, but of course, we are talking about organizing seminars and workshops to discuss international cooperation and, of course, collaboration to popularize and foster adoption initiatives aimed at building capacity for tax administrators at LDCs. Very, very important. Of course, we have bodies like tax inspectors without borders, which build audit capacity. And of course, we have the peer review of tax policies prior to implementation. This November, I'm actually one of the organizers, which basically are organizing the peer review between Kenya Revenue Authority and Gambia Revenue Authority, of course, in November 2021. To the last question, which was basically asking about the needs and priorities of developing countries during economic recovery following the downturn caused by COVID-19 pandemic. Of course, I'll basically break it to a number of areas. One of them is stable liquidity to enhance purchasing power. It's a big issue in this part of Africa, especially East Africa. But central bank, of course, need to be encouraged to prioritize monetary policies, of course, which will be sufficient, affording sufficient liquidity in the banking sector. Of course, debt management is very, very important to avert the crisis, especially the aspect of debt structuring. Of course, on the same, reliable supply chains for essential products such as medicaments, equipment, food, and supplements. And some of these, especially this one, is Kenya, we had a very big scandal in terms of corruption in this particular area. And of course, the support required on trade agreements to access these potential areas for strengthening supply chain for essential products. The other particular aspect which you're looking at the priorities is containing, in terms of containing the COVID-19 pandemic, of course, is cushioning, vaccines and of course, discussed. And of course, many of us are working from home in terms of ensuring that we reduce the issue of course, infecting others, especially when it comes to support and adversely affected industries. Of course, we have hospitality and tourism. And lastly, is the issue of government getting some revenues from taxation, where Kenya actually has instituted law to do about. So with those few remarks, thank you very much, and ready for any other question. Thank you very much.
Thank you. Thank you very much, Francis. I think I got most of it. Sometimes you broke up a little bit, but I thank you very much for your comments. And I will pick up one point that you mentioned, and I think it's something that's been mentioned by most panelists, is the cooperation. And I think there is a type of cooperation that it could be very useful. It's the cooperation between the private and the public sector. It's probably one of those where, where do we want to put our trust? When can you as a taxpayer be treated in the way that you want to be treated? And when can we sort of create this area of mutual understanding and try to do our jobs, whichever side you are on, private or public, tax administration and consultancy. So, I mean, I'm sure that the UN Tax Committee would very much benefit from the input also from your side, the private sector. It's also important, and I'm sure that there's a room for building confidence and a working relationship between those sectors as well. So, Francis, thank you very much for your comments today, useful, and we look very much forward to also hear from you in the future. Thank you. Michael, we have some time now for questions and answers. I want to give you the floor first to see if you have any comments before we start the Q&As.
Thank you, Lisa Lott, and I wanted to thank you and our very distinguished panel for the very practical and thoughtful suggestions. We've put a lot of emphasis on practicality, particularly in the interest of developing countries in the committee. It's part of the mandate that developing country interests are at the forefront in everything the committee does. I think the panel also showed that diversity is strength, and that inclusivity and collegiality at every point of the journey is really essential to truly identifying and sustainably solving the great problems that we have in tax as in other areas. So I think the panel shows the benefits of diversity, which is something that we've sought in the committee, and we've sought that collegiality, even where we have some quite marked differences. One of the benefits of the committee way of working is that there's often an opportunity to put both views. And even if people don't like the outcomes in a particular area, a particular article or a particular comment, there's always the reasoning behind that. And even if it's not your preferred way forward, the fact that there's some attempt to harmonize the wording, to find a single way forward, and where you can't find a single way forward, to put the alternative view and the reasons for it, and ultimately to put countries in the best position to make their own decisions that suit their plans for sustainable development. I think that's the beauty of the way the committee has worked in the past, and I'm sure it will work in the future. And just finally, again, the strength of this panel showed that the importance of working all the different tax stakeholders. And when we talk about tax stakeholders, we also talk about the people who don't pay tax for the right reasons, because they are meant to be beneficiaries of the tax system. And I always think it's a very noble work to be a tax administrator, to be a taxpayer who's paying the right amount of tax, because you are building up people's abilities. You are giving people opportunities for the future. You're giving them dignity. So I think being a tax collector, though it's often in the past not been seen as in favourable light, is actually a really noble way forward, a really noble career in terms of sustainable development. And exactly the same with that is paying your fair amount of tax as part of a partnership for development for the developing countries of the world. So we try in the committee to have this very effective combination of all the stakeholders in tax systems to try to find solutions that will work over time, and that everyone can feel, even if it's not the perfect solution, it's a solution that takes us forward, and it is fair to all the interests, including the interests that it's a little harder for them to resource and to engage in international discussions on some of these great things. So again, that is something we take in mind in the committee. So with that, I ask anyone who has a question, there are some questions already, anyone who has a question to put it into the Q&A box, and Lisa Lott will lead the responses to some of those questions. Thank you again to the panel, and thank you again to Lisa Lott. We look forward to working with you all over the next 4 years. Thank you.
Thank you, Michael. Thank you very much for those words. Some of the questions that we have in the Q&A are quite long, and I'm not too sure who I should pass them on to, not to put anyone on the spot, but I might do that. I might count on my panel. The first one is about why don't you impose the quotas tax policy, i.e. developed countries should pay a little bit high tax compared to the underdeveloped ones. I think that is a policy point that one can discuss, if it's a good policy or a bad policy, if it's practical. I don't think it's something that could be decided or worked on by the committee, unless you want to sort of talk about policies in general, what works and what doesn't work. But I don't know if anyone from the panel would like to have a comment on the quotas tax policy. I don't know, Joy, do you have any experience from the academic world on how this works, perhaps, just to sort of respond a little bit to Justin?
Actually, that's quite new to me as well. I don't think I've interacted with it before. I don't know if Logan might actually have something to say on it.
Well, I was trying to understand the question. Thank you. I don't know about the quota, but countries don't pay tax. It's taxpayers who pay tax. And so it's not in terms of just looking at the question, that's why I'm saying I'm not sure I understand it, because it's individuals who pay tax and companies who pay tax. And so the issue is that somebody raised earlier about wealth taxes and whether the higher income, especially in modern economy, I mean, Zuckerberg lost 105 billion in 24 hours and it's not flinching. So there must be something that says super profits must be taxed differently. So those for me are the principles that must be looked at. I think the bigger issue is whether a platform like the UN discusses things on the basis of inclusivity, equal rights and democracy on the one hand, but in the real negotiations, if you look at what's happening outside of the UN, it's about how countries protect the industries and their companies from paying high taxes in other countries. And so the interest is a general interest, not of equality, but of fighting for the protection of the tax base of that region or the country. And I think helpful will be if the UN confronts this as a real and not try and make peace with everybody, but deal with the conflict. Thanks.
Yeah, I think that's a very good comment, Logan. And I almost thought at one point we should change the name of the tax treaties, not to avoid double taxation, because unfortunately that sounds like sort of very nice, you know. But what it is really is each country fighting to have their tax base as much as concrete as possible. So it's a good point, Logan. I will go to the next question. The next question is from Professor Browner. Will the tax committee take concrete steps to assist countries in enacting domestic legislation compatible with new Article 12b and 12a as a matter of fact? And 2, will the committee consider how developing countries could use country-by-country reports operatively, regardless of the OECD position about their limited role in the tax enforcement? The first point I will leave for Michael, perhaps, because it's more of sort of capacity building, which is perhaps a little bit more on the DESA Secretariat part. The second question, I think, I don't know if the panel can want to respond, but what I could say and what I consider is that I don't foresee that the committee will not carry on and try.
Such a matter for the new committee, and no doubt will take into account the views they understand and get from developing countries, but also current developments. So there's both the policy element for the committee. I make sure I never suggest which way the committee will go on any particular point, but whatever happens, there will be capacity development issues. And even when you look at what happens in, for example, the inclusive framework, we never forget that at the moment there are many UN members who are not members of the inclusive framework, and we never assume what the outcomes of any inclusive framework results will be one way or the other. Thank you, Lisa.
Thank you, Michael. I thought it was more. I think you understood Jari's question better than I did, and I think your answer was very complete. So there is a part here that would be a sort of practical guidance or handbook or manual on how to implement these taxing rights that are established in 12A and 12B. So I and then there is I thought more of a capacity building aspect of it, which would be part of another area of the work of the UN. So thank you, Michael, for clarifying that. Then we have a question from Alex Cobham. Both the FACTI panel and the UN Secretary General's initiative on FFD beyond the pandemic have now proposed a UN tax convention, which could create the basis for intergovernmental negotiations under UN auspices. With the OECD process now clearly failing to deliver inclusive measures and the urgent pressures of the pandemic, can the UN Tax Committee see a role for itself as the secretariat to that new UN body? Or is there a route to upgrading the committee to globally inclusive intergovernmental status that could achieve the same result or same end? I'm not too sure. I'll just start and then I'll see if anyone wants to butt in. But I will start saying that the role of the committee is more or less, I mean, it is set already. We can't really go beyond our mandate. Now, if we want to take on a new role, I think that would have to sort of be within the new emerging issues as a sort of proposal for the future. I'm not too sure if that is a way that the committee wants to go forward. The role of the committee trying to upgrade it to intergovernmental body has been going on for many years. And I think it's a sort of a level of discussion at the UN ECOSOC level, political level. Tove, please go ahead. Help me out on this question.
Thank you so much. Yes, I think it's a very important question. What is this UN tax convention? And some of the other questions also touch on it. There has been a discussion about the different types of legally binding agreements on tax, and there are some examples. Tax has very much existed in the world of models, and then the discussion about models basically leaves it up to governments later on to decide whether they want to make those models into real instrument or not. But with the multilateral legal instrument developed under BEPS, we of course also saw an example of a multilateral agreement. But in considering what a tax convention could be, I think it's really important to also draw on the experience of the United Nations. Multilateral agreements is what the United Nations does for a living. And there are many examples of very successful multilateral agreements that have in my opinion, performed much better than what we have on tax. There's often a lot of discussion on the importance of the experiences that is contained in the OECD. But when it comes to successful, simple, and effective multilateral agreements, we also need to look at, for example, the environmental regimes of the United Nations. There we have the approach of framework conventions that establish the basic objectives and principles and institutions and decision-making processes on an issue, and then gradually moves forward in the negotiations through the adoption of protocols and the adoptions of further guidance and so forth. And I really think it's time to take a fresh look at this complete mess of bilateral agreements that we have on the tax. If you take the multilateral legal instrument and you start to look at what has governments actually committed to, you end up in a very big matrix of which countries have opted in and out of which articles and which treaties have been subjected to be covered by the multilateral agreements. It is a mess that starts to open up the Pandora's box of the origin of tax avoidance. A very important reason why corporations are not paying tax is because we don't have clear international system to make sure that corporations do pay tax. So, and in terms of the role of the committee, you'll find in several of the environmental conventions, the Climate Convention and the Biodiversity Convention, that they have scientific bodies that provide technical expertise to the decision makers in the convention. So having an expert committee is actually a very big advantage for an international decision-making body. And one of the suggestions we have put forward is maintain the expert committee, have it be an advisory body to a real intergovernmental body where we can have the UN member states make global decisions on global tax standards. I look very much forward to debating this a lot more, I hope, in the committee.
Thank you very much, Tove. I think Logan wants to comment also as well. Please, Logan.
Thank you. Just to add to Tove's point, I would say an important element is, yes, the tax committee of experts, but behind that, you need a capable secretariat. I think the one thing that gives the IMF that works in the tax field and the OECD that works in the tax field, an important edge is what Marcio and I experience. When you have a capable secretariat that can go into countries, support, the result is revenue, then decision makers listen. So I believe that if the UN committee is totally supported and there's sufficient technical skills behind it, and it results in revenue for developing countries, I almost guarantee you that the debate on the platform will take a naturally different course. At the moment, we are basing it on cordiality and democratic principles. Those are not bad things. But what is on the table? Does it bring in the bread? And that is where the committee can evolve and use the platform at its disposal. I think we need to look at the technical expertise and the financial investment in the secretariat here for the UN committee to evolve in a way that we see it must. That has been our experience. Marcio can come in. The second quick point is that in the absence of all of this, there are international standards being made elsewhere. What are the consequences of this? The consequences is in Kenya, for example, there are two Kenyans on the panel here. The court in Kenya accepted the OECD transfer pricing guidelines as law because Kenya, at the time of a particular court case against a multinational, did not have transfer pricing laws. It did not look at UN transfer pricing guidelines. It looked at OECD transfer pricing guidelines. In the meantime, on environmental taxes, on exchange of information, on binding arbitration, and the introduction of digital services tax, developing countries are facing real sanctions, both from the EU and from the UN, if it does not comply. But none of those countries has had the opportunity for their national jurisdictions to have a say over tax laws. It's being made elsewhere by an organization represented probably by 20 countries, and now are being faced with political and economic sanctions on laws it did not have a fair share in making. So I think the debate is beyond a cordiality and let's coordinate for everybody to have fairness. The debate is the reality of what developing countries are losing every day. And so I think the UN committee almost do not have a choice. And the UN has to invest in the secretariat that Michael and others are doing so well with little resources.
Yeah, thank you, Logan. I think, you know, from my perspective, the years that I've been involved in the tax committee, it has developed tremendously. And I just hope it will carry on and do that in the future. In the end of the day, the UN is each country that is a member of the UN. And we have seen who are the donors, who are the ones who are supporting. And of course, each one of us as a member state can try and push our governments, our countries to put more money into it, to favor this area of the UN work. And I think at least it has been very beneficial the last years, and I'm happy to. I look forward to that development in the future. Marcio, do you want to make a comment as well? This is a very important subject, so I'm happy to hear from you as well, Marcio.
Just a general comment. I mentioned in the beginning about the necessity to improve the quality of our human resource. I was really told, and you and Logan know this perfectly. If you start listing the international issues that we are discussing, 15 actions on BEPS, they are all very important. But of course, if for many countries in the world, the Action 3 is a very important country, the control of foreign companies. But if my country has no companies with branches on abroad, there is no, for me, this action has no value. It's the same with the Action 12, a very important action, the disclose of tax mechanisms. But if I receive the disclosure and I don't have a team to work on this, what's the sense? So if you look for Pillar 1, Pillar 2, 15 actions, conventional models, transfer pricing methods, when you go to the countries, and I am always there, you see many countries, they have 2 or 3 persons, and even they have an English worse than mine, and they have to read all these documents. It's very difficult. I don't want to say impossible because nothing is impossible in our areas, but there are many challenges and many things at the same time. And the countries, they don't have the capacity. We are talking about here agreements to avoid double taxation. Take a look at Latin America and Africa. How many countries have a good net of agreements to avoid double taxation? Chile, Brazil, and now others. But visit these countries, we will see many countries, Caribbean countries, Central America country, Latin America country, Africa country. If you find 3 persons that have a good knowledge about the conventional model, is very difficult. So I think what is important for the countries at this moment is try to find their priorities, their necessities, and concentrate their focus in 1 or 2 actions. As Logan mentioned, the digital economy and the environment tax is a new one. But for many countries, the priorities are totally different. So I think that's the problem. Many things happen at the same time, and we don't realize that the developing countries, they don't have this capacity. And to conclude, for me, what is important is to make strong organizations like ATAF, like SIAT, and we try to collaborate with these countries to minimize the problem, because we cannot solve any of these questions. Thank you very much.
Well, thank you, Marcio. And I would like to just mention something. I think it's slightly, I don't know if it's, can't find the right word for it, but what happens is that with so many years in this area, and I completely agree with you, Marcio, you find 2 or 3 people in an administration who know enough about it. And then unfortunately, they're capacitated and then they leave. And then you have to try and find 2, 3 more and train them, and there's 2, 3 more. It's a vicious circle.
Exactly.
In the end of the day, and then perhaps that this is something that we should think about as well, we have to simplify things because it's so complex now. So there's a challenge there of trying to simplify and really look to the essence of what is necessary for a developing country, and not just getting sold the ideas from developed country, basically, because they are different. They are different. Thank you, Marcio. Joy, you also want to make
priorities. Priorities.
Exactly, exactly. Because we can't do everything. Joy, please, you want to intervene here.
Yes, I wanted to point out 2 big things that Logan and Marcio pointed out. First is, when Logan was talking about the implications of sanctions that countries are facing, that means we're going beyond the tax space, and we're going into the trade space, and we're going into the investment space. And there needs to be much more keen attention that will be paid to what might happen at the WTO level as they begin now to, they're reinvigorating the operations at WTO. And we've already seen a number of cases on taxation where subsidies are concerned at the EU level, but also, at the WTO, and there needs to be much more attention being paid to this. And there are risks that countries face when it comes to dispute settlement. And it's actually the point, it's the reason I raised the point that we need to pay more attention on dispute settlement, because increasingly developing countries will shy away from international dispute settlement. And the result will be a situation like the Vodafone and Can cases, where India tries to quickly resolve the situation, but ends up with two cases at once on the same exact issue, and a lot of money spent. The other point is about regional representation and regional secretariats. And Tove, I know the discussion about an international body has been very important for so long, but I must agree with Marcio. Regional organizations have better potential to actually understand the capacity issues and to understand the contextual challenges. So ATA, for example, can better relate to the authorities they deal with. And indeed, what should give you a really good picture of that is there are more members in ATA from Africa than there are in the inclusive framework. And I think that's really important. They're engaging more with the regional organizations than they are with international. And, it should also place in context the challenges being faced. Within the African context, not all of them have the tools or the systems to begin talking about transfer pricing, let alone, now BEPS 2 and implementing BEPS 2. And again, we've not even seen the impact of implementation of the BEPS 1 outcomes. So I think we maybe need to discuss also what will actually work for the authorities on the ground, rather than this big conversation about a huge organization where developing countries often do get lost. Thank you.
Thank you, Joy. Francis, please, your input.
Just a quick one. I hope you can hear me now.
Yes.
One, the issue about capacity. There is a problem with capacity, but there's some other item we are leaving out. There might be capacity like in Kenya, but the motivation of government to listen to the people who have the capacity is a big issue. For example, when you talk about the tax policy, we have already developed a framework 3 years ago as the Institute of Accountants. I was part of that team. We gave to the government. It's actually wasting away somewhere. So the capacity might be there, but the motivation to listen. Of course, the other item to conclude for me is that we also have twisting, organizations, especially for poor countries. So where, for example, the VAT, you don't want to charge VAT on milk, but IMF comes with conditionalities like in Kenya, and you find yourself into problems. Currently, we have a whole problem about minimum tax, which is being pushed from various corners, which I'm not going to mention because of time. That even if you make a loss, you still have to pay a percentage, 1% of your turnover. It's a killer. You close businesses actually. So that particular push, the government can be looking at a different side, but it's being pushed from a certain corner so that you have very unfair tax regimes. And I also mentioned about the tax policy, which is not there actually even to help. For example, businessmen in Kenya, you can't basically work 1 month, you're working this particular month, next month you have a change of law. I've been fighting this for a long time, and we should be having stability. And those are the frameworks which are found very, very clearly, even from the founders of these processes. They came up with what we call, the canons of taxation. They are completely missing, especially stability. Back to you. Thank you.
Thank you very much, Logan. I'm trying to go back to the questions. We have a little bit more questions. There's some questions on this UN convention, how it would work, etc. I think just as a question, in my view, a UN tax convention, multilateral, whatever, it needs a little bit of a steering from above. It's a political decision, and I think in order to perhaps evaluate that, what the committee could do is to sort of think about it, discuss it, and look at it. But again, many of the things that we're listening today is just to get an input for the members of the tax committee to set their agenda. So without going into details on how and what it's envisaged, etc., into the details of it, I think it's more interesting to listen to what colleagues are thinking about, how things could be worked out and discussed by the UN Tax Committee. So I wouldn't go into the details of how it would look like, etc. Now, there is also some questions if it's about possibility for civil society to, including labor unions, to dialogue with the UN Tax Committee as regards BEPS Pillar 1 and Pillar 2 from Tony Salvador. I think what we have said, and I don't foresee that the Tax Committee will change in that sense, is that civil society, labor unions, business, private business, etc., has always been welcomed at the UN Tax Committee at the meetings, to participate in the subcommittee, in the technical groups, etc. So I can't really foresee that will change either. Ilka, perhaps would you like to comment on that?
I think we also had a comment from Anne, who's actually part of one of our subcommittees from private sector. And I think that actually one of the things that the UN has been very good at that the UN Tax Committee also differentiates it from other bodies, is that they have been very inclusive. So most of the meetings of the UN Tax Committee are public. There are only very limited meetings that are closed, and then you also have subcommittees, and on those subcommittees we usually assemble people from academia, such as Joy and her colleagues. We usually get input from NGOs and from private sector, be it consultancy or M&Es and so on. So I would say that's actually a strong point of the UN Tax Committee, and as Anne said in her comments, we really hope that the next membership will continue to harness the knowledge of outsiders or of NGOs, of private sector, of academia, of international organizations such as ATEF and CIAT to advance what they're working on.
Thank you, Ilka. I will pick up some comments from, I'm starting from the latest comment now. Carlos, our colleague as a member of the committee, is commenting on Marcio's comment about prioritizing and focusing as on the most relevant issues, and I absolutely agree with that. And I think someone from
Lisa Lode, I think Tove has her hand up, if I'm correct.
Okay, sorry. Okay, Tove, please.
It was just before we move on. Yes, first of all, on the civil society point, absolutely. I think for all involved, the engagement and participation from civil society has been really helpful. The one thing is on the relevance of the debates, it would be easier if we have the problem that when we hang up from a UN Tax Committee meeting, when we're not allowed to say what we saw and heard, it is difficult to let the rings spread in the water, if you want. And I think the lack of public meetings is a challenge in terms of also engaging governments and other civil society colleagues. So that does pose some challenges. And just quickly on the on the UN Tax Convention and Intergovernmental Tax Body, I never understood why this is seen as an alternative to regional work. That for me is something that could definitely reinforce each other and would exist perfectly in tandem. And in fact, I think in many UN processes, we really see the regional engagement be a key element of the way it functions. The one place where there would be of course, there would be. It is an alternative to the OECD-led process. That's where the discussion is, and I also wonder when people talk about this enormously big UN body that would be set up. If you look at, for example, the Climate Convention and the related UN Secretariat, yes, that is a substantial secretariat. But looking at what's going on at the OECD, I'm surprised that some of these concerns about big bodies do not come out when it's being proposed to set up a whole new tax system for 100 companies. Okay, the 100 biggest, but the amount of new panels and secretariat processes, and when you look at the blueprints, hundreds of pages, it's really, really difficult for me to understand why people are so worried about the UN processes because coming from a UN-led process, I have to say it was a lot easier to get an overview of what's going on than coming into what's the OECD is producing. For me, it's very long documents, it's very unclear, it's a lot of institutions, and it would be interesting to see a discussion about the resources being spent at the OECD. A UN process for me would be handing it to an organization that runs international processes more smoothly, would be my very, very bold statement on this.
Yeah, thank you too. I think my point is more that there has to be political willingness, and then there is political willingness for one thing, and there's not one for the other, and then within that you have to just try and do the best you can. Michael, you also could help us a little bit perhaps with this.
Yes, just very briefly, on the issue of reporting, there was a ban which was in the registration and will be in the registration, or is in the registration, on live reporting. That's not to say you can't report after the meeting, after the day's events on what occurred. Now, of course, it's up for the committee to change that rule. It was a request, and one of the reasons was that people were forgetting this was an expert body, people speaking in their own capacity, and were reporting in their live blogging that Chile had said something when it was actually Lisa Lott, for example, just an example. So it's certainly up for the committee to decide whether it even wants that ban on live reporting. I think a lot of these things we have to consider in the light of new methodologies. I agree with Lisa Lott. Even when we're over this COVID crisis, we need to use the audio-visual, the tools we have, the virtual tools, so that we can reach out to people who can't attend our meetings. Maybe the younger people, maybe more women who won't get the travel authorization but really want to participate. And several people have made the comment in developing countries that even listening to the tax committee, the cut and thrust of discussions on digital or something else is itself a form of capacity development. So these are a few thoughts, but it's for the committee whether it wants to change that rule, Tove, but we don't prevent reporting, just not live reporting. So there's still plenty of scope to report what the committee says. Thank you, Lisa Lott.
Yeah, thank you, Michael. Thank you, Tove, for raising that. I think I remember a sort of incident when it wasn't very clear, and I think the point is the members are acting in their personal capacity, and I think if that it's made clear, and it will be up for the new membership to decide about that. But I think it's a good point, Tove, and I think accountability, transparency are very strong words, and we should take them very, very seriously. Let me see if there's anything else here on the end. Latest, I wonder whether tax cooperation coordination could be seen in a more practical way, since capacity struggles are common for TAs of developing countries and investment minds seems to also be important to predict. Why don't we explore better ways to exchange sensitive information experiences experienced inspectors? Besa, anyone from you that want to take on that that question, or you want to respond directly? I think from what the committee has done and what it's trying to do is to be a sort of practical help and to address situations where other organizations are not addressing it for developing countries. And I think in that sense, it makes perfectly sense to to work on all those types of capacity buildings or handbooks or guidance, etc. That would be of interest. And I think also someone here from the World Bank, Norbert Roller, do you see a chance to simplify international tax rules in order to respond to capacity constraints? What could the UN committee do? I think that's a very interesting thing. And I think I mentioned it myself earlier. I think simplification and looking at what is really the essence of what is required it's a very interesting point. We've discussed that on a regional basis within Latin America, and I think it could be very interesting to suggest some talks like this for the UN committee. Let's see if there is any the other questions that I could quickly, perhaps Ilka, you could help me with something that because they're quite long questions, so I need to take some time to read them.
If it helps, Lisa, I can mention a few, and then the panel can discuss a few of the ideas that I noted.
Okay,
and,
thank you.
The first of them is the private sector role, which was asked by Ron Long, and the private sector role in achieving the sustainable development goals, well as part of a partnership with countries, is incredibly important, and we do value the private sector input into the committee work, and the ICC particular has been a very valuable partner, and many advisors who we think when you're dealing with an issue like royalties, it's very important to get some of the private sector experts in, which help identifying the issues and the priorities. There was also just a couple of things. There's mention of unilateralism being demonized. I've used that same term myself. We see multilateralism as a spectrum between the Big Bang international conventions and also the gradual process of multilateralizing the legislation. I won't say unilateral legislation, the domestic legislation of countries. And the UN plays an important role in bilateral treaties and in UN suggestions about domestic law, and all of those can have a multilateral aspect. So we see multilateralism and so-called unilateralism as a continuum, and good unilateral ideas can go forward into the multilateral level, and good multilateral ideas can come back to the unilateral level. So those just a couple of points I thought might be useful to draw out, and very pleasing to see such distinguished tax commentators in the chat box. If we don't follow anything up, you know how to reach us, and we can give a more complete answer, at least from the Secretariat perspective. Thank you, Lisa.
Thank you, Michael. Yes, I'm also very happy to have some very interesting. I mean, I've enjoyed very much the conversations. There are some questions about what will the UN committee do, and I repeat myself now, but that is up to the committee to decide, and they will have their first meeting the 19th of October, and you're very welcome to participate in the meeting and register for it. So very welcome to all of you who are interested in the work. Joy, please.
Yes, just on that question about the private sector and what role they can play in contributing to the SDGs as well. I think one thing we've been looking at a lot is the role of cooperative compliance. I think there's a lot to be learned from business, especially for tax authorities, in terms of understanding the supply chains and the value chains. And the only way for tax authorities to learn about it is to have more insight into the operations of a business, and to have more kind of cooperative ways of carrying out an audit, of understanding the overall business, the way it works, and how the transactions are taking place between, the entities within a multinational enterprise. And I do wonder to what extent private sector are more willing to share more of their experiences with tax authorities who are struggling to understand. And, it's kind of where there's an asymmetry of understanding. So when you come down to maybe a transfer pricing dispute, the way that the business sees this transaction and the way the tax authority sees it will be fundamentally different. Maybe we can transform how we viewed, APAs into let's cooperate on understanding the specific transaction and business in order to make our audits more efficient or effective. And just FYI that we have a great book on cooperative compliance here in Vienna. On the point of unilateralism, actually, it made me think about when I was completing my master's a few short years ago, the debate was at first about sovereignty in taxation, and how do we maintain our sovereignty? And it's very fascinating to look at how the debate has transformed. And it's almost an obligation for countries to engage in multilateralism. And it's shocking now that, Kenya is taking a stance and adopting a digital services tax. And it's even more surprising that Kenya would then say we don't support the statement of the OECD inclusive framework, when indeed 5 years ago we might have said absolutely Kenya has the right to do that. And I would love to hear from the other panelists about this transformation in thinking that has happened, and what the implications are for countries that still want to maintain responses and very context-based responses to their tax systems. Because one thing, for example, has been the introduction of mobile money taxes. And that's very unique to African countries. It's not addressed at the international level just yet. But what are the implications at the multilateral level when countries continue to introduce what is technically a digital tax, but I don't know if the OECD definition will capture mobile money taxes as a digital tax as well, but I'm very interested to hear what the other panelists think about that.
Thank you, Joy. With those comments, I'm afraid, but I think we're going to have to stop now. But with those comments, Joy, you just opened a Pandora box, if I might say so, of having a new conference, because there are lots to be discussed. And I think that's nice to hear. We don't have, our job is not finished. We have lots of other meetings and discussions and exciting things to talk about. Just let me hear, Michael, are we now, we need to close now, as far as I understand. It's 10:20.
We'll close this part of the proceedings.
Yeah,
I'll
okay, so I'll hand over to you to introduce the next part.
Thank you. And my Greek studies of many years ago show there are alternatives about Pandora, whether there were some good things in the box as well as some bad things. So we'll see what the actual definition of the Pandora's box is, but then that's me being a lawyer. And I just wanted to mention, in mentioning the spectrum of multilateral, bilateral, and domestic law, of course, regional organizations play an incredibly important part of what we've heard. Just before passing to Naveed, I wanted to thank the team who's been involved in this, too many to mention. And I wanted to thank Naveed for his strong support for this work, along with Caroline Lombardo, who you don't see, but Caroline heads the International Tax and Development Cooperation branch. So thank you to those. And now over to you, Naveed. The floor is yours. Thank you.
Thank you, Michael. Good morning to everyone and greetings from New York. I want to begin by, of course, thanking the UNDESA team for bringing this event together, but I'm here to convey 4 things. And first of all, I must commend you and congratulate you for a very lively event. I have been following it from the margins off and on. My warmest congratulations to the outgoing tax committee members. And I must say they have produced some very useful products under very trying circumstances. The 7 guidance publications that they have produced I must say they literally burn their midnight oil, especially the co-chairs. So my very strong appreciation and thanks to the committee members. And they have produced guidance which will be used all over the world. I'm very confident about its utility. My second point, which applies to both the outgoing committee members and of course incoming committee members, that you give voice to the voiceless. United Nations brings together all stakeholders on their equal footing. Member states, the private sector, civil society, regional networks, global networks, academicians, and experts. So the committee provides the most inclusive platform on norm setting and capacity building on tax issues, which are in high demand nowadays because the tax landscape is changing very fast. Third point is the breakthrough that the last committee accomplished in connecting the tax committee's work with sustainable development goals. The sustainable development goals and the 2030 agenda, I think, is the best roadmap that globally could be conceived as a global agreement to address the challenges we are confronting nowadays: inequality, climate change, unemployment, loss of biodiversity, and the pandemic that we are confronted with, health challenges. Tax policy, that's what the UN's call has always been, is meant to improve lives of people. It's about people, planet, and prosperity. Any tax policy which is designed just for revenue generation is not enough. We have been advocating in the SDGs and tax work that the last committee members pursued is primarily meant to advance three objectives. Of course, revenue generation, distribution of income, which is fighting inequality, but also encouraging investment in sustainable technology, sustainable projects, sustainable infrastructure. So any tax policy which is not designed to achieve these three objectives is not consistent with the 2030 agenda, the larger global agreement. And we are very convinced that the next committee's work in all spheres should be built around the 2030 agenda and tax policies. And that's what is the crux of the message by the Secretary General in our common agenda, which he has presented to the world for the next 5 years. The last point, an open invitation to everyone to contribute to our background documents, to the meetings. You're all invited to engage with the United Nations and help the new membership of the committee to even do a better job than their predecessors in producing guidance, in engaging in capacity building, work that the UN offers to every country in the world, especially the developing countries and the least developed countries and the small island developing states. So please bring your expertise, your knowledge, your aspirations also to the committee's attention, to the committee's work, and help us in advancing a fair, just, and equitable tax system all over the world. Thank you so much for your engagement, your participation. We are looking forward to your continuous engagement with the committee's work and with the Secretariat's endeavors in advancing these goals. And let me also thank you, my very competent team led by Caroline, Michael, and other colleagues who are spending more than their share in terms of working for the UN and for this committee. So my sincere appreciation and commendation to them also. And thanks to the outgoing chair, and of course to all the panelists who joined us. Thank you very much.
Thank you, Naveed. So with that, we thank everyone. I will particularly add to Ilka, to John, and to Sylvia. So thank you and goodbye. The recording will be on the website very soon. Thank you, Naveed.